Are you keeping up on current pricing for cost of goods? Are you keeping up on what your shipping costs are? Because bringing in a container from China got very expensive. So making sure you're adding that all up and attributing it to the product. And then the biggest thing we've been telling people, and I think it's just important now, stay ahead of the pricing curve.
You're listening to the Traffic Handler Podcast. We're about getting new customers, making more sales, and growing your e-commerce retail business. I'm your host, Amy Biddle. My guest today is Rocky Lalvani. He's the Profit Answer Man. He's a certified Profit First professional. His role is to work with business owners to educate them on how to implement business systems in their business so that the money flows where it should go. He's watching out for how you're going to pay your taxes, how you're going to buy that influx of inventory, and how to pay yourself. So we had a short and very lively and very informative conversation about how to deal with capital, profits, expenses, and all these things in your business. You don't have to be an accountant. You can ask Rocky. Enjoy the show. So my guest today is Rocky Lalvani, and Rocky's the Profit Answer Man. We're going to have a great talk today about how you as an e-commerce store owner can manage your finances using the Profit First method. And we'll get into what that is and what that means. And Rocky, welcome. Glad you're here.
Thank you so much for having me, Amy. Excited to be with you today.
Yeah, we're going to have some fun. So just before we started recording, you and I were having a conversation about how e-commerce store owners, whether you're sourcing from China or, out of the country or domestic, whatever, let's start with the conversation that we were heading toward, which was about, you've got overhead costs. Capital expenditures. Let's start with that. How can e-commerce stores manage this better?
And so we'll dig into more about how Profit First works. Mm-hmm. But this is one of the things that you can enhance Profit First for. Okay. So what I do with my e-com sellers is every time they sell something, and when I mean every time, I don't mean that they're doing it order by order. I mean, they're doing it, maybe once a week or twice a month or maybe once a month. They go in and they look at what they sold and they determine their cost of goods. And then they take that amount of money out of their bank account and they put it in a cost of goods account. So they literally swipe their cost of goods out the moment they sell something. And now it's ready so that 3 months from now, if you need to place a large order, whether it's China or wherever you're getting your large order from, you've got your deposit money ready. Mm-hmm. You've got your money ready to make the order. There's no anxiety, mm-hmm. right? It's just sitting there. Now, some people say, well, I'm trying to grow. Okay. So if you're looking for rapid growth, what we might do is take 110 or 120% of cost of goods mm-hmm. and put it in the account. And this way, when it comes time to order, you can order 10 or 20% more, have the cash to pay for it, or at least have most of the cash to pay for it. Okay. So you're not covering all of these high interest charges. Yeah. And you're getting rid of the anxiety and the worry. And that's a big part of it. Everything we talk about is to make your life easier, to make it simple. Nobody wants to be an accountant, probably, no. So we're going to try and stay away from that. But yet and especially today, as we're recording this, the signs are flashing recession. I'm hearing the big retailers ordered too much crap and now they're stuck with it. Yeah. So I think things are going to change. So being able to pivot and being able to survive a downturn allows you to win against your competitors. Because if half of your competitors go away and you're the half that survive, well, now you have double the market coming out of this.
Right.
So it's a game of survival. And that's really what Profit First is all about. How do you maintain good cash flow and positions so that you can survive?
Great. Boy, that's a golden target right there. be the last one standing in your region if you're geographic, or niche if you're anybody, really, if you're selling online. So are there ways to grow faster? Like 110, 120? I know a lot of business owners aren't going to be really excited about 20% growth, even though that's a respectable amount of growth.
So I think it depends where you are in the curve. So I'm not the expert on growth. I'm not the guy who's going to teach you how to grow faster.
Yes.
I'm the one who's going to go, how are you going to pay for that growth?
Yeah. Yeah.
Because more often than not, growth is what leads to bankruptcy, because they get too far ahead of themselves. Now, for your listeners, this is probably not an issue. But I know for a lot of people, it's like, oh, I wish I could sell to Costco, right? Costco would buy all my stuff. Well, people don't realize, in order to sell to Costco, you've got to front a couple different runs of inventory into Costco, which means you need the cash flow for growth.
Yes.
Same thing for your clients. If you want to grow at 50%, great. Here's my question. Can you put 150% of your cost of goods aside?
Right.
Because if you can, then it's easy. Then it's a no-brainer. If you can't, we have to ask ourselves, do we have good pricing?
Right.
Are we appropriately pricing to cover our margins, to cover our growth? And can we afford to do that? I'll be honest, I think, and this is not what everyone else is going to tell you, but good, steady 20% growth year after year after year. It's kind of slow and it's kind of boring, but I'll tell you, the businesses I see where the owners make the most money are slow, boring, constant businesses.
Yeah. Yeah. I remember having a conversation with a client last year, like, okay, we're through with the sale period, whatever, it was Black Friday or a peak sale that they do every year. And then I was like, all right, now we get back to the grind. That's where you make the good money, and where things are predictable. I am rarely guilty of the conservative move, but I see the value in what you're saying. Steady 10 or 20% growth is really nice.
Well, yeah. I mean, if you think about it, 20% growth means you double maybe every 3.5 years. Yeah. So if you're doing $1 million now, 3.5 years from now, you're doing 2 million, 3.5 years from then, you're doing 4 million, and then you go to 8 million. That's not shabby at all.
It's not shabby. Yeah. Yeah.
And it just, it allows you to go live the rest of life.
Yeah. Yeah. Nothing wrong with that. That's good. So when you work with somebody, how do you get started? They come to you, they're in business, can you tell me about an e-commerce store that you've worked with?
So I think the first thing we want to do is analyze where you are today, right? Where are you at? We want to look at your margins. So what's it costing you for your cost of goods? And part of that is also all your shipping, all your other ancillary things that some people tend to forget about. What are your cost of sales? So Shopify takes a good chunk of money.
Yes.
Right. And it's also taking the time to evaluate, are you on the right plan with Shopify?
Right.
Because they have a lot of different plans and some of them get very expensive. And so making sure you have the right plans, and then making sure that, we've got the right pricing, the right profit margins, and then we're looking at our cash flow. At the end of the day, that's what's most important. How is our cash flowing? So Profit First, if no one's read the book, Profit First is all about cash flow. There's actually a Profit First for e-commerce book out there as well. Okay. The biggest thing that comes out of the Profit First e-commerce book that's different is that you need to reverse engineer your numbers. I think too often people say, oh, I bought this for $1. I sold it for $2. I made 100%. And they go, you forgot shipping, you forgot fees, you forgot overhead.
Yeah.
It isn't so simple.
Yeah.
And so if you actually know the numbers, do the math, you'll start to realize, for a good private label brand, if you're buying something for $1, you'd like to get probably close to $4 to really have those respectable margins.
Exactly.
So that's the first thing we're evaluating.
Right.
The implementing a profit first is basically what profit first does is, number one, it changes the equation of sales minus expenses equals profit. So profit being a leftover to sales minus profit equals expenses. So now profit comes first. We constrain our expenses. And then what we do is we give every dollar a job. So when the money comes in, right, we talked about this already. Hey, we're going to put money in the cost of goods account. So we've given that a job. We're going to put money in our profit account. So we have our profit. We're going to put money in our tax account. So when the accountant says you owe taxes, you go, oh, I hate that. Let me just stroke a check.
Yeah.
And I'll tell you, I think the best story I heard of that, I'm trying to remember his name. In any case, tax time comes. He had a blowout year. His sales went up dramatically. Most CPAs are not looking at your sales throughout the year. Most often they're basing it on the year before. Well, the accountant doesn't want to call him up because she knows what the tax bill is and she's afraid to have the conversation.
Yeah.
Finally calls him up and she's like, I apologize. You have this massive tax bill. He's like, how much? And she's like, it's about 6 figures. He goes, no problem. I'll drop off a check. He had more than enough money in his tax account to just stroke a check. Nobody wants to do that. But what I'm hearing consistently from people who do this is, hey, we hate tax time, but we know we can face it. We know we can stroke a check. And if there's extra money left over, bonus time for us.
Yes.
The other thing is make sure you're paying yourself. So we have an account so owners get appropriately paid. And then we have an overhead account where all your overhead goes to cover the cost of running the business itself.
Yes.
And so that takes care of all your overhead. And now your money goes to where it belongs. You know what its purpose is. You know what to spend it for. And what it does is very quickly tell you if you've got a cash flow problem. Because you don't have this one big pile of money.
Yeah.
If you go to order your goods and there's no money in the cost of goods account, you're like, well, what happened? Something went wrong. Or if you go to look at your operating expense account and there's no money in your operating expense account, that means you spent too much. And now you're going to take money out of your profit to cover your OPEX. Now you know why you're not profitable because you're spending too much. And businesses have a spending problem. They all do. They all spend too much.
Yeah.
Just human nature.
So is it your job to stop them from spending or just to, be more conscious or?
So it depends.
Okay.
For a lot of people, having somebody there for accountability helps. I can tell you, so the author of the book is Mike Michalowicz.
Yes.
Mike cannot trust himself with a bank account to save his life. So he actually has 2 more bank accounts.
Okay.
They're in a separate bank. And so he moves his profit and his tax money to a separate bank, and he can't withdraw that money without a second signature.
Oh, cool.
Right?
That's a great system.
Because he knows left to his own devices, he'll spend it.
Yeah.
And so I think that is up to you as a person. What's your self-control?
Right. Right.
And if you need to have that level, and I'll be honest, in the e-commerce space, it's so fast moving and so chest thumping that many of them might need that hidden bank account.
Yeah. Yeah. No, that sounds like a really good recommendation. And I had forgotten that because I read the book years ago. And don't ask me if I implemented.
Most people don't.
Yeah.
They read it to go, oh my God, this is an amazing idea. And then the question comes, did you open the bank accounts?
Right.
No. Did you implement?
Right.
No.
Yep.
So I will just say this, and let's cut to the chase real simple. For those of you who are thinking about this and says, oh, all these bank accounts, all this stuff, look, pick one of these 2 bank accounts. Either pick a cost of goods account and start putting your cost of goods aside, or pick a profit account and start putting your profit aside. How much do you put in your profit account? 1%. That's it.
Okay.
We're
All
going to
right.
start with a baby step.
Mm-hmm.
Just try it and see what happens. And you'll be shocked at how much money starts coming in, how much you start to save. And you'll be like, wow, I was letting money disappear faster than I imagined.
Yeah. Yeah. It's always so easy because when business is fat and
Mhm.
you're making a lot of sales and it looks like you're doing really well, well, there's this extra app that I want to get, or there's this extra tool, or we can bump up the packaging and make that real pretty. And it's really easy to go in that direction.
It's real easy.
Yeah.
To do that. It's not hard at all. And so I think it's constraint. The other thing is seasonality.
Mm-hmm.
If you've got people who are selling everything around Christmas time, all of a sudden you're in hog heaven. Well, then summer comes along and there's no money.
Right.
So one of the other things we do is we tell businesses who have seasonality to take their excess, put it aside, and every month you take a fixed amount out to cover your slow months so that
Mm-hmm.
you smooth out your cash flow. And
Right.
it really takes all of the emotions out of it and the ups and
Yeah.
downs, and it just keeps life a little bit easier, I think.
Well, cash management, I mean, if you want to sleep at night, you got to have some control over it.
You do.
Does it
And
matter where the bank account is? Like, are there certain kinds of bank accounts that are better than others?
free.
I like free. I like free banking.
We don't want to pay for bank accounts. If your bank's going to charge you for bank accounts, go somewhere else.
Mm-hmm.
But other than that, no, it doesn't really matter, savings or checking, whatever works for you. Your operating expense, your cost of goods might need to be checking. Tax, I think they'll pull tax money out of anything. They don't care. So
I don't care. Yeah,
they-
they'll take whatever you give
they'll
them,
take whatever you
and
give
then
them.
they'll ask for more.
And then they'll ask for more. So that one is pretty free. And I know most of your people aren't on Amazon, but I will tell you, when I go on to my Amazon sellers,
Mm-hmm.
I have them go into the software and run a P&L by product.
Okay.
And they're usually very shocked at what the results show them. They start to find out that there are a lot of products that they're really not making any money on.
Mm-hmm.
And that at the end of the day, if you start tying up the effort, the listing, and everything else, they're like, wow, that didn't work out so well. And part of that is, I think, Amazon pricing is much more dynamic, whereas on Shopify, you get to pick. So that's the other thing, we'll look at what coupons look like.
Mm-hmm.
You start running coupons, we're going to start looking at your margins after coupon, because that very quickly can get into trouble.
Big time. Right.
Big time.
Because on one view, that 33% discount could be more expensive than that to you.
Mm-hmm. You might actually be negative.
Right.
And if you don't do your math, and the other thing is keeping up your cost of goods. I mean, COVID really caused havoc in the market. So are you keeping up on current pricing for cost of goods?
Mm-hmm.
Are you keeping up on what your shipping costs are? Because bringing in a container from China got very expensive.
Yes.
So making sure you're adding that all up and attributing it to the product. And then the biggest thing we've been telling people, and I think it's just important now, stay ahead of the pricing curve, right? You don't want to get behind the pricing curve, meaning.
How do you do that? Say more about that?
So I think you have to cut, how many products does an average person have who's selling through you?
Oh, I've got one product stores and I've got 12,000 SKUs in another. So it just depends.
I mean, when you've got one product, it's really easy to keep a pulse on what the next round's going to look like.
Mm-hmm.
When you've got 12,000, I think what you do is sample. So we can always keep an eye on a shipping container rate. We know how that's going. We can start to see what the ups and downs are. So I think it's a little bit of awareness, and then watching the marketplace. Are your competitors raising prices?
Right.
Let's not race to the bottom.
Mm-mm.
Let's race to the top, right?
Yeah. Yeah.
It's a much better place to do business. So I think inflation is here.
Mhm.
When it abates, I have no idea. But in the meantime, if you're starting to see, hey, prices are up 10%, then maybe you start raising prices on what your inventory is. Because when prices go down, you're going to have to take a cut on inventory. So you
Yes.
need to be ahead of the curve on the way up so that when you're going to get stuck on the way down, that you at least have that margin left.
Yes. So margin is really the name of the game. It's not how much I'm selling it for, very important. How much I bought it for, very important. Profit margin, that's like the gold standard number to make decisions on, right?
It is. And so I think a lot of times we don't associate all the appropriate costs to that.
Okay.
And then the second thing is making sure it is large enough to cover it. Because a lot of times it's a low profit margin, but it's bringing in revenue.
Yeah.
Yeah, but it's sucking up your time. It's sucking up your space. And that's what you have to be very careful of, is what that all looks like.
Yeah. So you just said a magic word. If something is sucking up time is a commodity that we're just never going to get more. It's never going to happen. You only have 24 hours in a day. The only way to duplicate yourself would be to have good employees.
And I think a lot of times we don't appropriately put the time into the margin for the product.
Right.
We don't account for that overhead and give a overhead number to every SKU.
Yeah.
And so even if you have 12,000 products, if your overhead's $50,000 a month, you can do the numbers and say, okay, each product should carry 50 cents of overhead.
Mm-hmm.
And how does that affect my margin? And for some people, it might be a much higher number going towards that.
And that'll be impacted by things like, do you hire people to help you? And do you have a warehouse, or are you paying rent, or are you working out of your garage or a spare room? Things like that, right?
All of that counts. And, at the end of the day, even if you're working out of your spare room, even if you're not paying yourself rent, are you calculating a rent cost for yourself?
Right.
Because I know back in the day, there were people who were selling on eBay and they were selling books, and they were getting the books for free practically and selling them on eBay.
Right.
And they soon realized they actually weren't making any money.
Yes.
After paying the fees, doing the work, they're like, I'm making pennies. This is not worth my time and effort.
Right. Right. And as a person who's done all of these experiments, I'm agreeing with you based on experience that, selling on eBay or, just my experience has been that going the cheap route costs more. And that brings us back to the premium pricing that you were just talking about, saying, don't race to the bottom with pricing. It's actually easier to sell a premium luxury perceived product and to build that up.
And you'll have better clients.
Yes, right, exactly. So how about marketing costs? Let's talk about that for a moment. Marketing costs generally can be well over 40% in this day and age.
Ooh, that's a lot. If you're spending 40% on marketing, that to me is a red flag.
Okay. All right.
And I'll tell you why, because let's just do the numbers. If you've got your cost of goods at 25%,
okay,
you're marketing at 40%, you're now at 65%.
Yeah.
Okay. We didn't add Shopify fees, right? We didn't add overhead.
Yeah.
So we start doing and we forgot shipping.
Mm-hmm.
You start adding that up, and what are you down to? 10, 5,
yeah,
4%? So here's the thing with marketing, and this is what drives me up the wall with the marketing people. They come to you and they go, hey, if you gave me $1 and I returned to you $2, you'd do that all day, wouldn't you? And everyone goes, yeah, but wait a minute. If I sell something, if I pay you $1 for marketing my item and I get $2, I still have to pay my cost of goods.
Mm-hmm.
I still have to pay my overhead. I still have to
Mm-hmm.
pay all those other fees. I might actually be losing money.
Right.
And so I think you need to be aware of that. So when it comes to marketing, and this is good for people who are, I think, in the Shopify or on the e-commerce space, because they have a much better handle on their numbers.
Yes.
What I want you to do is look at where your marketing dollars are going. And then I want you to evaluate where your sales are coming from based on where your marketing dollars are going.
Mm-hmm.
And I want you to see if your marketing is effective.
Mm-hmm.
All right. And you might find certain channels of marketing bring you good returns,
Mm-hmm.
and certain ones do nothing. So
Yes.
get rid of the marketing channels that don't return. People go, I don't always know how to track this. One the biggest thing we tell people is use unique coupon codes for each marketing channel, so
Mm-hmm.
that when they purchase, the coupon code tells you where they came from.
Mm-hmm.
And then track all your coupon codes, track you. So let's just say I use this marketing channel and I track my coupon codes and there's 100 sales.
Okay.
And I track this one over here and I use the coupon codes and there's 400 sales. Well, we're all going to go, well, let's go with the one with 400. But wait a minute.
Right.
What if the one for 100 cost $1,000 and the one for 400 cost $25,000?
Right.
Now you're like, oh, maybe I need to spend more in this other area
Mm-hmm.
because I'm just spending more there. So you really want to look at cost per item and how that returns
Yes.
and figure it out. And
Right.
then there's the other thing. How do you get marketing for free?
Mm.
Right? That's my favorite. So
Yeah.
so to me, free market's a couple of things. Number one, it's people come to you because you did something that didn't necessarily cost money.
Mm.
It could be affiliates. But the
Mhm.
thing with affiliates is you don't pay an affiliate until they sell something, right? So that's always nice because you're not putting money out up front and you have a fixed marketing cost. Let's say it's 20%. But I know unless I sell it, I'm not paying anyone 20%. So it doesn't really cost me until. I think if people have 40% marketing costs, I would spend a lot of time focused on marketing and saying, how can I improve my conversion rate? Or ask yourself, what's the lifetime value of this client? Am I paying 40% for the first one
Mm-hmm.
and then the rest I pay next to nothing for? Okay,
Right.
I'll accept that.
Mm-hmm.
But if you're paying 40% for each and every client every single time,
Mm-hmm.
I think you're going to struggle to make a profit unless you've got super, super high margins.
Good. That's good. I think it's a great place to end. You have given us some magic and some sorcery that's really going to, advance the cause. So, Rocky, how do people get a hold of you?
So before they get a hold of me, can I ask your listeners a favor?
Yes.
If you like Amy's show, would you just rate it and give her some kudos and share it with others, people who are e-com sellers? That really helps her to grow. So we always appreciate when you do that. The truth is it's lonely in the podcasting world. So give a little love to Amy if you
Thank you.
enjoy this.
Thank you for
You are
that.
most welcome. If you would like to learn more about me, what I do is I teach everything that I do for my clients. I give it all away for free. You can find it on the Profit Answer Man podcast. We go into much more depth of profit first, and then we go into all of these specific situations and how to improve them.
Fantastic. Great. Well, we'll close on that. Rocky, thank you so much for being here today. And I know people are really going to profit from what you had to share.
Thank you so much for having me, Amy. It's been a blast.
You've been listening to the Traffic Handler podcast. We're about getting new customers, making more sales, and growing your e-commerce retail business. I'm your host, Amy Biddle. Get more at amybiddle.me. And until next time, go sell more stuff.